Good morning and welcome back to Almus Market Mornings. Currency markets barely moved yesterday, with the RBI firmly guarding the 92 level in the USD INR, keeping the rupee largely range bound. Commodities, however, told a very different story. Gold and silver surged to fresh highs in the morning, spent the day consolidating, and then saw a sharp correction at night. But interestingly, copper stole the show, rallying sharply by almost 10% in the day to eventually joining the broader pullback across metals. Good morning, JK. Could you give us some clarity on the chaos in the commodities markets yesterday?
Good morning, Ishan. Yes, the massive movement. If you combine the up move and the down move, it's a huge, kind of volatility that you've seen in the commodities yesterday, particularly in gold and silver. Gold almost hit 5,600 in the morning trade in Asia, and then, of course, retraced back to around 5,200 later in US time. Now, generally, the big moves that we see in early Asian time in thin liquid conditions are not sustained, and we do see pullbacks. But yesterday's pullback was much deeper, both in silver and gold. This was also, led by some month-end settlements, as well as some reports that one of the trading platforms in China has shut down, being unable to honor contracts. So there was generally kind of reversal factors building up also with such large moves that we have seen in the month of January alone. Urge to take profit was also quite high. We'd also seen the stock markets taking a hit to begin with, although they recovered later. So I think I am right now not seeing this as any major reversal, but definitely considering the massive movement that we had seen, almost a parabolic move in both gold and silver, in fact in copper as well. This is just a case of profit taking, build up of speculative positions, which has been now kind of pruned down, and we should see some more correction, which will be healthy for the markets. And although the underlying trend will not change because of investment demand, as well as the industrial demand as well. Uh, Apart from that, in US, we did have quite a bit of, news on the economic side. We had the factory orders, which were stronger, coming in the wake of higher, industrial production data, as well as, the PMI manufacturing improving. We also had the trade data, which of course showed higher deficit for the month of December. And although it is still quite low compared to the 2-year monthly average of trade basis. But one number that really caught the eye was labor productivity, which has climbed to 4.9% in Q3 of 2025 compared to 4.1. And the surge in productivity is helped by technology and automation, as well as shift to higher productivity sectors, as well as supply chain normalization. So the point is that U.S. economy is still showing good, traction. Although on the employment side, we do have a slowdown, which is also pointed to by the Fed chairman. So there is a jobless growth which is ongoing in US. However, market is also seized of so many other factors other than economic factors. Like there was a the news that President Trump has ordered a huge amount of army and naval buildup in and around Iran, and Iran has responded saying that if there is any action, it will be treated as an act of war, and they will be ready to respond as well. At the same time, kind of something you can take it as positive, that Kremlin has actually invited President Zelensky for direct talks with Moscow, and if it happens, that will be the first time. So far, Zelensky and Putin have not met directly without mediation, and this could be, if it happens, this could be a big shift, and so I think market will be looking ahead to this development as well. And back to the Iran issue, I think this has also resulted in oil price rising well over 15 months in the last couple of weeks, and this week alone alone it has risen by nearly 10%, and that should be something that be concerning for oil importing countries if it does sustain. And of course, there was also news about one report which said that President Trump is ready to announce his next candidate for Fed chairmanship as early as today. But of course, many other websites or reports that do not confirm. More likely in the coming week or in the coming weeks. That's what it says. On the markets, stocks did slump after some of the downbeat earnings by tech company, particularly Microsoft. There was kind of caution that is prevailing, particularly in the tech sector, as investors are rattled by the latest earning reports and worry whether the hefty spending on artificial intelligence would be paying off, as expected. So more disappointments could lead to more sell-offs. That is what one can look forward to. And on the currencies, dollar still ranging, having broken up and then retraced down. Euro holding above 1.19. That's a good sign for the single currency, although the official statements are closely looked at, because one of them ECB members had mentioned that if the euro continues to strengthen, it could be a problem and it could have some policy implication as well. On Japan, yen again did not manage to break 152 in the few attempts that it made. Now back higher at 153.80. Today's morning data from Japan are quite subdued. Inflation number in Tokyo region came at 2% versus 2.2% expected. Industrial production and retail sales were also on the downside. So I think the pressure on yen yields are somewhat easing right now, but at the same time we are seeing some fresh weakness in yen also that could be gaining attention from the policymakers. In India, yes, there was as much demand in USD INR as in the previous days, but only difference was the presence of central bank above 92, and in offshore, rupee did try to regain some composure after the fall in the metal prices. So again, some sort of a month end easing of positions could, and also ahead of budget on on coming Sunday, could be in the mind. So that could be leading to some sort of a consolidation in the USD INR. We did have the economic survey presented yesterday in the parliament, which is emphasizing on highlighting rather the macro stability of the economy with low inflation, fiscal and banking health, buoyant tax collections. Going ahead, the survey is emphasizing on the need for self-reliance, but also to be integrated with the global supply chains. It's also noting that Indian capital markets need to be strengthened further. Undervaluation of rupee also gained attention in the survey. While it is a positive for helping the export sector in view of the challenges posed by the tariffs, it also highlights that it can impact the investor sentiment as also. So ahead of the budget, I think Indian markets should range. There will be speculation on what kind of measures, particularly in relation to markets and investments, will be coming forth from Finance Minister Nirmala Sitharaman. And of course, we have almost ended the month of January, which has been very high in volatility in almost all the sections. And what we look forward to in February will be a host of central bank meetings, RBI to start with, and then we'll have Bank of England, ECB, and Australia among the major banks. Announcement on new Fed chairman will be another focus. And apart from that, the US economy's position, in particular the employment data, Japanese elections, and of course the ever-present geopolitical concerns will occupy the minds of the traders and investors. Thank you.
Thank you, Jairam. So, and just to summarize, huge volatility was seen in the commodities market with almost gold touching 4,600 in the morning session while pulling back to almost 4,100 at night. And just as we speak, Gold is falling again, and the prices are at 5,150 currently. And one of the trading platforms shut down in China, not being able to honor contracts. Thus, several reversal moves were seen, and also general profit taking in the market. But we don't expect this to lead to a complete reversal in the trend, but just a case of profit taking and healthy corrections to keep the markets grounded. And geopolitics continue as President Trump has ordered a big navy build-up near Iran, and Iran has responded saying that they're ready to respond to this act of war, potentially by the US. And US stocks did slump after downbeat earnings by some of the bigger tech companies in the US, and keeping investors worried whether the heavy AI spending will pay off positively in the financial statements. And when it comes to the rupee, the presence of RBI at 92 is keeping the rupee quiet in the offshore markets. The pair is slipping past 92 on a daily basis. So let's see when the RBI allows this to flow and we see 92 domestically as well. We are at the last trading day of the month of January, keeping us on our toes and making it a very volatile month. So let's see what February has in store for us. Thank you all so much for listening, and we'll catch up on Monday now with a fresh round of updates. Thank you.